Questions are raised over banks' profitability as rates are poised to fall. Welcome to Market Insight. I'm Ludovica Brignola. Europe's biggest banks are healthier than at any point since the 2008 financial crisis, but investors now need reassurance that they can trust their longer-term earnings power as interest rates fall. Bank share prices have broadly risen double digits this year, and Deutsche Bank, Lloyds and Barclays will kick off third quarter earnings this week. So what's in store for the sector? Well, to help answer all that and more, I am joined by Davide Serra. He is Algebris CEO and founder. Thank you very much for being with us today. Right, so let's start from cross-border mergers in Europe. In principle, most policymakers, right, seem to advocate the need of mergers in the continent. However, as we are seeing in the case of UniCredit and Commerzbank, domestic politicians and German politicians in this case often seem reluctant to accept this. Now, what's your take on what's happening?
Well, listen, my take is simple. Those that advocate merger and consolidation are mainly public employees that create sector policy that cannot lose their jobs. So basically, they tell others you should cut costs and you lose your job because ours are not at risk. So inevitably, it's easy to say it. It's very hard when then you get into reality and you're actually trying to achieve those synergies. As a result, every local politicians will try to defend their own domestic jobs. It's normal, it's natural, it's part of the democratic process. So easy to say, harder to do.
Right, that's interesting. And now, speaking about the banks themselves in Europe, right, we are seeing policy rates starting to fall. We predict this cycle, in fact, to continue. Now, to what extent will this erode banks' profitability, and what can European banks do about it? Because we've seen predictions, and they seem to be quite positive for the upcoming earning season for the banks.
Listen, over the last 10 years, we have seen and witnessed something never in history: negative rates. It's an experiment that I think society will never try to experience ever again. Today, we're currently seeing inflation globally at its natural rate, 2 to 3%. It's a healthy rate of inflation because basically it helps easing part of the aging population in terms of future liability in the pension system. So you need some inflation. Too little is bad, too much is bad. Now, if you take a global rate in the range of 2 to 4%, which is what I think where we're going to land in the G7, G10 area, banks will remain in double-digit profitability. Those that have been able to cut costs, because they did so over the last 10 years, are going to be very profitable. So in the mid-teens ROE, the less healthy one will be in the low teens, some even below teens, like 8 to 10%, and the best in class around 20%. So, and I think actually over the next couple of years, with more machine learning and the overhyped AI, in reality, banks will be major beneficiary out of machine learning because there is so much tasks the machine could do better than humans, in particularly for data gathering and data analysis.
Interesting. Does it mean you're broadly optimistic then about the upcoming earnings season for the third quarter?
Yes, listen, we're long-term investors, so one quarter does not make a difference. But if I look over the next 2 to 3 years, I think broadly the European banking sector will generate cash flow returns, so dividends plus share buyback on a cumulative basis in the range of 30 to 40%. So I don't know many sectors that have this cash flow generation in the next 3 to 4 years.
Right. Given the huge challenges ahead, such as we know, the decarbonization, militarization that many now advocate, and also the huge investments, as you were mentioning, in tech with AI booming, it's reasonable, right, to expect that cash-strapped governments will be increasingly relying on the private sector. To what extent are European banks able to support the lending activity to tackle all these huge challenges?
Well, in Europe, banks account still for 65 to 70% of the overall economy. In the States, less than 35. So undoubtedly, as markets develop, private lenders emerge, deeper bond market, banks probably will account for less of the overall European economy. That's actually something healthy that people should applaud. You don't want to have a super concentrated banking sector with basically all your eggs in one basket. Having said so, Europe is not one market. It's not the US. It's 25 different markets, 25 different regulators, 25 different judges and policemen. So the reality is we're never going to have the death of the US capital markets. And as a result, banks, particularly local and domestic banks, will keep on playing the lion's share game.
Right, and speaking about this, the very essence of Europe in a way, we've been talking about a banking union in Europe for a very long time, yet we are still seeing lack of meaningful progress on many of these aspects. I mean, how important is the European banking union right now? And to what extent can this improve the competitiveness against US or even global banks?
In a way, I think think about it. We've been debating banking union for now 10 to 15 years. The reason why it doesn't happen is because there's no political will out of Germany. So the standing bloc has a name and a surname. It's called Germany. And to be honest now, we have a test. It's UniCredit has acquired a 20% stake in Commerzbank. It's clearly proposing further integration and cost cutting. Commerzbank has lost more than 20 billion euro over the last 20 years. Received government aid in the range of 28 billion euro, and hence this is the final test. Germany has been pushing for market competition, for state aid rules, and if they don't apply to themselves, but they only apply to anybody else, I think the whole European project will just fall apart. Meaning at that point, all bets are off, and everybody does whatever they want. So we shall see.
All right. Thank you very much, Davide Serra, CEO of Algebris. It was a real pleasure having you on the program. And that's Market Insight. Don't forget, you can watch more videos on Reuters.com.